Hi, this is Randy Finney with Right Side of the Chart, and today is Tuesday, August 23rd, 2016. In this video, I wanted to go over the agricultural stocks. I made mention in an update this morning on the site I might touch on the ag commodities, the individual, grains and beans and things like that, but I won't have enough time in this video. There's quite a few individual stocks that look compelling here, mostly longs, but there are some short setups as well. And so what I'll do is I'll talk on the sector first, which we're looking at here. This is the agricultural input sector on TC2000, and I believe freestockcharts.com. They use a symbol IX1010, and there's a list of stocks over here. I'll show you my watch list. These are the components of that sector, and I'll cover the ones that I have highlighted here with the that I've flagged. Time permitting, I'll roll into MOO. MOO is the MOO, the agricultural ETF, agriculture business or ag business they call it. And quite a few of these names are that I just showed you on that watch list are within MOO, and there's quite a few that aren't. So I wanted to go over that. And if I don't make mention of it later, one of the reasons, at least trading this sector, I do see some opportunities, but there's a mixed bag. There's, like I mentioned, quite a bit of nice long setups, some which we've already had on the site as active trades, and some unofficial trades that have done well recently. And more importantly, there's some that look like short setups. Now, the difference there, or the disparity, usually if I find a sector, let's take semiconductors, for example. If you trade the SMH, semiconductor ETF, it's made up of either semiconductor stocks or semiconductor equipment makers like KLAC and AMAT and those. But so for the most part, very tight correlation, very similar business models. They're all competitors, and 90+% of those stocks will trade highly correlated. Now, in the ag business sector, there's a lot of variation, especially in MOO. You might have your equipment makers. You have Toro, for example, they make lawnmowers, and then you have Monsanto companies that are looking into genetically modifying corn and things like that. So there's a lot of variation, and I just want to make that clear. Now, the point to that is, when you trade in a sector, if you want to trade the ETF MOO, and I always mention this with an ETF, but it holds more true in this case. You trade the good with the bad. You trade the bullish with the bearish setups. Just as when you buy the S&P 500 tracking ETF, the SPY, you have roughly 500 companies in there. And obviously, at any point in time, some of those companies will be going down because they're in industries that are bearish, or they have individual fundamental issues with the company, and you have companies that are going up, and that's why your returns are somewhat muted. So point that I'm making here is, sometimes if a sector, if I expect a lot of the individual stocks to move together, like for example the silver mining stocks I pointed out recently is a bearish opportunity, a short setup, the vast majority of the silver stocks will fall if my call on silver, SIL, the silver sector ETF, is correct. So that's fine to trade silver. Now, I might trade individual stocks, which I do because I prefer to sniff out the most bearish setups in a bearish sector. All right, so that point's been made. So I'll go over these. And again, if you prefer the safety and diversity of ETF, just keep that in mind, that your returns overall will probably be muted compared to taking, if you want long exposure to the sector, ignore those bearish charts that I'm putting out here today, or we'll talk on, and go with the most bullish setups. Let's start out with Monsanto. I'll just go in order here from the top down. I have these sorted, as you can see here, by market cap. So you can keep that in mind as I go down the line. I'll click on the ones that I have flagged that stand out to me. And Monsanto is one of the larger companies. You can see a nice symmetrical triangle here, pretty well defined. You had a similar pattern here. This wasn't exactly a symmetrical triangle, but you had a well-defined downtrend line, breakout, back test, nice move higher. And so far, this is pretty well defined. You have this one very large wick. I don't have any problem when I draw trend lines ignoring especially very large shadows and wicks on candlesticks. It's really the number of reactions that you capture. So that's a pretty well-defined trend line. And there's a breakout today. It's impulsive. It's confirmed on volume. Where did I have that? Over here somewhere? There we go. So the volume so far is pretty good. And another thing, if I don't cover it on each of these stocks, look up here in the upper right hand corner. This number here is the dividend yield on these stocks. Now a lot of these ag stocks are dividend paying stocks, and I know there's quite a few growth and income investors out there, and so some of these will likely be added as official growth and income trade ideas on the site. But if I don't mention it again, just take a look and you'll see some of these have a pretty attractive dividend, especially considering we're in a zero interest rate environment. So there's a 2.07% dividend yield on Monsanto. And there's a pattern. So a breakout today. Some of these I'll talk on profit targets if I have them set up. Didn't mean to do that line. Let's delete that. Get rid of that. Tried to do a horizontal line there so I can give you an idea of where the first resistance level is. See, we're close to it now. There's a reaction there, reactions. And if and when that goes, it looks good all the way up to about the top of that triangle at the very least, and then possibly beyond. So there's one that looks good on a breakout. It would have been nice if I had this ahead of time as a setup. But again, I'll update these, and if and when I see an objective entry on any, I'll make a point to put these up as official trade ideas. All right, now I'll have to move through a little quicker on the rest of these in order to keep this video relatively brief. Here's Potash, symbol POT. This one has been a growth and income trade on the site for quite a while. Really just working around. It seems to be in the spacing pattern, and you can see a fairly well-defined downtrend line it needs to take out. If and when that occurs, it should continue on. It already hit. I can't recall if this was still a current trade now or this was in a previous trade and I re-entered, or what the deal is. I'll have to look at the site. I own these long-term. I know Pot and Mosaic in my long-term accounts, and they're fertilizer stocks. Very similar. That's why I mentioned Mosaic with it. And you can see they already hit some of the price targets. But, right now it's just really not doing a whole lot. It's been going mostly sideways in a fairly large range all year, all the while paying a decent dividend. They may have reduced that dividend since, but it's still, you have to factor that in, even if a stock goes sideways, or even if let's say we make a 10% gain from the entry price, and that takes 6 months, well, you've been paid out 2 quarterly dividends, so you have to add that to your total return. So, not a screaming buy right now, but just keep an eye on it. It does appear to be possibly basing here, and again, that would be your next buy signal, break of that downtrend line there. Here's AGU, Agrim. Looks like if you look at this downtrend line here, which is fairly well defined, in this uptrend line, you have this triangle pattern, and we're sort of wedging in, getting close to the apex, and apex is where 2 lines converge. So sooner or later that one will break to the up or downside. You can see targets there. You could replicate these on your charts. And again, if you're a member of the site, just drop me a line in the trading room, and I will be more than glad to share some potential price targets and my thoughts, update any of these trades at that point in time. So if it does break to the upside after that, we have some reactions right here, and that could take us all the way to that $100-ish level. The stock's at 92.05 right now. But again, this is like anything else, especially with a symmetrical triangle. Those are patterns of indecision. They can break either way. So you need to respect, upside or a downside break. If you wanted to go long to sit and collect this nearly 4% dividend, ideally you want to try to buy towards close to a pullback to this uptrend line, and then you can set your stop on, ideally I'd like to use a daily close below. By using a daily close, you avoid these whipsaw signals. If you take a look at that candlestick tail right there, that shadow, you can see that intraday prices pierce below but close back above that trend line, just as they did back here. So that's why I like to use on a daily chart, especially for longer term swing traders. If you're buying this as a buy and hold play for the dividend and you believe in the sector, then that's not a very large stop to allow. Wait to see a daily close. And again, the closer you can buy to the trend line, the better off you are. If you buy here, you're sort of in what I call no man's land, which is between support and resistance. Although this line here, if you look back, the horizontal line, which is about 93.11, I have it, quite a few reactions there. You go back to the left, you see reactions from below, reactions from above. So that's actually a level as well, and a pop above that will most likely bring us up to the top of the triangle pattern. So those are the levels to watch in AGU. MOS, this is the other fertilizer stock, similar trades, very similar to potash. This, you can see a similar downtrend line, and we're pushing right up against it. In fact, we kissed the top of that downtrend line today, or we kissed the downtrend line from below. So you have a sort of this triangle-ish pattern. I should tighten that line up right there. And this one's really pinching. And if it takes out the downtrend line, I have this horizontal resistance zone, these two lines here that need to be taken out. And if we break this downtrend line here, that could bring the stock all the way back down to the bottom of this range. Let me try to share my thoughts on what I'm thinking. If I take this shaded box, see, this is a consolidation range we've been in for months now. In fact, it goes back earlier in the year. We got a little bit above it when we hit my second target. We had this trade back here, and that was hit for a very nice quick gain back there. And I had this T3 zone. Price target still to be determined. So if assuming we break out of this trading range, this sideways trading range we've been in all year, that's a pretty powerful base, and I would expect a relatively quick move. Now, relative means relative to the time frame. It took 6 months or more to build, 8 months to build this trading range. So I'm not talking a one-day move. Anything's possible. But I'm also not talking a 6 or 8 month move. I would expect that could be hit within weeks, probably no more than a couple months, again, if we make a solid breakout and the sector is confirming at the time. CF, kicking myself for not adding this as an official trade idea. I did put it out as a setup recently. I had earnings. I can't remember. Maybe I had an official aggressive entry. I took it personally. I'm still in it, but I haven't put it as an official trade idea. But it's done everything that I wanted to see it do. Remember, it gapped down on the earnings for those of you that followed this one. Gap down. It had long-term support on the weekly time frame, which it held. You can see it held the bottom of that support. There's that large, steep, bullish falling wedge pattern, confirmed bullish divergence on the weekly time frame that we're looking at here. Jumping back to the daily time frame, it's within this wedge, and it's moving higher. So those bullish divergences, same reason I added it as a setup right before earnings to begin with, are still intact. So this one looks good. You're collecting, currently about a 5.2% dividend yield on the stock. And if and when it breaks above this downtrend line, that would be your next buy signal. Although keep in mind you have this horizontal resistance right here around 27.05, and they come in roughly together right now. So you really need to see not the first of. A break of this downtrend line was certainly bullish. You have to be careful that you have this resistance. So the safe bet there to add to a position or to take a new position will be on a break above 27.05. You can see that horizontal line as you go back here, how it acted as support when tested from above back there and back there. The targets, once that breaks, is a pretty large wedge. I think that one would have no problem moving up to this 32.30 area. And ultimately, I'd have to maybe adjust and put another line around here. I'll update that as it goes. And again, if you're trading it currently or you plan to, just ask me for an update if I haven't done so, and I'll be glad to share that. ICL, Israel Chemicals. This was one, I can't remember if it was an official trade idea. I remember trading this one myself a while back. I had these two target levels. It was this downtrend line, positive divergence, bullish divergence at the lows. And what I'm watching right now, you have this uptrend line off the lows. This horizontal line, if you really focus, forget about everything else you see on the chart, just look more recently here, you can see this triangle type pattern. And I can't draw too much from the RSI and the MACD. They're sort of flattening out. However, price-wise, you have this triangle pattern, and a break above, especially above that line there, that horizontal line at 430, will most likely be the impetus for a move up to that former first target around the 480 area. There's a big gap right there. And of course, if you want to target a little shallower, you can target the bottom of that gap. You can see the gap right there. Bottom of the gap is around 468. But again, go ahead and replicate these on your own charts and just ask me if you have any questions. TNH, Terra Nitrogen, we need to go back a little farther here. There's a long-term downtrend line. When I say farther, I just clicked on a 2-day period chart that spans 4 years. There's a downtrend line and what I call a primary downtrend line, a minor downtrend line. And the safe bet is to wait for the latter of the two to break. Although, I can certainly see we have 3 reactions now on this trend line already. It's very possible it could pop on a break above that trend line. And, stops really depend on your entry. When I put up a trade setup with a downtrend line, the entry points and the stops, they're dynamic. And what I mean by that is when you have a horizontal line, that's a static price level. It doesn't change. Downtrend lines are dynamic. The price changes on a daily basis. On a downtrend line, the price becomes lower and lower every day. On an uptrend line, that level increases every day as time goes on. So there's what I'm looking at, a large triangle pattern. When you go out to the weekly chart, you can actually see bullish divergence on the PPO. We're looking at the PPO, the RSI, prices making a lower low. So long term, this one looks good. And these are the things I'll be looking at, throughout the remainder of 2016 and into 2017. A lot of these ag stocks, ag commodities as well. UAN, just some levels to watch. There was a downtrend line there. Breakout, back test, moved higher. We have this downtrend line here and a potential uptrend line. I say potential because we only have 2 reactions so far. And in my book, it takes 3. That third tag or third reaction validates a trend line. Either way, there's also some support levels to watch here. Horizontal support right there around 656. If that goes, then 616 is the next level. So this one's not a screaming buy or sell right now. I'd be more bullish than I am bearish on the sector. I'll make that clear. But again, as I said, you really have to look into what each of these companies do and base them each on their own chart. Here's a company, AVD, American Vanguard Corp. I'm not sure what they do, but I can see pretty clear negative divergence here. The MACD is rolled over, negative divergence on the RSI, and a fairly well-defined uptrend line. So this looks like a large rising wedge pattern, and it has work to do before it breaks down. Let's see, I haven't really done anything on the weekly chart, so it's really in between anywhere I would enter, and I'm certainly not interested in shorting at this point, but I just wanted to point out negative divergence, so I'm not crazy about that one. AGFS, this is a large, very large basing pattern here. You can see for over, about a year now, close to a year now, it's been trading in this very large range. It looks like this one may have gone public back here. There was very thin trading. That's an ultimate price target. If it breaks out of this level, you have a target here around 750, and then ultimately I think it moves up to that 950 area. I think that's a possibility. Did almost, technically that's not negative divergence. I drew it that way, but you had a slightly higher high here, but close enough. So just something to watch. And again, this one's in no man's land right now. It's sort of in the middle of that range. Just something you might want to put on your own charts and watch for a breakout. I'll probably set price alerts on these later on, and maybe that price alert triggers in a month. Maybe it takes 6 months. Maybe the stock breaks to the downside. You can set price alerts on the top and the bottom of the range and either short a downside break or go long an upside break. IPI, Intrepid Potash. This one I really like. High risk because it's a cheap stock. It's only $1.36 a share. You had a divergent low back here. You can see the bullish divergence. It has moved up higher since. It was a penny stock at that point. It dropped under the $1 level, but a nice, pretty well-defined downtrend line. This reminds me of the recent RTK. I put that one up in the recent long trade idea video. I did 2 videos for long trade ideas. That was covered in there, and then I continued to update that one in the trading room. That one I personally took, and it just hit my final target. We'll get to that one in a second. This one reminds me of that. These small, low-price stocks, keep your position size small. Don't become married to the trade. There's a key support level around 118. But pop, and you want to see volume. It's sort of limping right through the trend line now, but that's not a breakout. You want to see this one start taking volume. If and when it does, I think it can go to $1.80 in the blink of an eye. And, from $1.30, let's just say $1.38 up to $1.80, that's over 30% return. If it clears that level, I would certainly expect a reaction there. But if it does clear that level, I don't think the next stop isn't all the way up until about 260. And there's an 88% return. So the the fact that you adjust your position size down to a smaller size to account for the above average loss if you lose in percentage terms, it all washes out. If you're going to trade a 30 or 80% gain, you can allow yourself a 10, 15, even 20% stop loss on this one if you take it. So there's one to watch, ideally on a break of this yellow downtrend line, maybe a pullback to that support level if you want, with a stop on a daily close below. RKDA, Arcadia Biosciences, it's just a nice downtrend line to watch. Nothing stands out too much to that one on this one other than the downtrend line itself, and I'd have to give you targets on that. Let's just cross that bridge when we come to it if we get a price alert. Here's that RTK I mentioned. It was similar to that IPI I just pointed out. You have a very similar downtrend line, also a low price stock that flirted with, never made it below that $1 area, but came close. And this one, proved nice. I pointed it out again the day, before the breakout. I believe the day it broke out, it was a little high. And I stated in the trading room, I believe, that if it came back in, it would offer an objective entry, which it did. It came back in to back test the breakout. So you can see during that day, it was, I guess that's the point it opened right here, shot up, came back in, and offered a nice objective entry, and then went right up. I had listed these targets, and it hit the top of that. I always set my price targets a little below the actual resistance. The resistance was at 385, and that's about to where it went so far. Now, this isn't a hindsight post. I wouldn't enter it right now. In fact, I took profits when we hit that level. But what I would point out is, this little sucker's been basing for a while, like a lot of these ag stocks. For most of the basing has occurred in this range. We had a brief point where it fell down below that 225 level. So this goes all the way back to November of last year, and that's a pretty powerful basing pattern. So if and when we get a breakout of here, and sometimes you get these little intraday breaks that don't stick, you want to look for a breakout on confirmed with volume, above average volume. And this is an extremely thin area here. By thin, I look at these volume at price histogram bars, these green and red bars, and you see virtually, you hardly have any right here. The only thing you had is this quick move down. So a thin zone is comparable to a gap. Once it's entered, gaps don't have any trading activity. In this case, you have very little. So that's effectively the same deal as a gap. Once that gap gets entered, or that thin zone gets entered, there's a good shot the stock will backfill it. So again, you need to see it move, up impulsively into that area, increased above average volume. But level 3, there's 396. So really 4. You want to be safe, wait for a solid break over $4, and that should carry that stock up, assuming the sector continues to do okay, to the 530 area. So you're looking at about a 33% rip right there. And at that point, I think I would certainly expect a reaction, meaning a pullback. You might get a momentum overshoot to the upside, but I would be a seller just before that level, booking full profits again on that one if it gets there. CGA, nice symmetrical triangle, or nearly symmetrical triangle. Pretty well-defined downtrend line here off the lows you can look at. We're close to it now. So one could go long there with a stop not far below, maybe on a daily close, or wait for a breakout above that downtrend line, and you can see some target levels around 150, 165. And again, when you see these low price stocks, keep your position size small, but remember the gains, on $1.38 up to 150, there's a 8% gain almost. There's a 19 and 20, almost 22% gain on these targets there. So, even if you take a relatively small position size, and what I like to do is sprinkle out my money amongst these. Instead of going with MOO, the Ag ETF, I'll pick the most bullish setups here and, spread my money across half dozen or a dozen names in the sector. Here's another one I like and actually own personally, MBII. We traded this one in the past. These targets must be from a previous trade, and this one, that's a level that I'm watching there. In fact, I think I had an order filled on that one. I had that in a long-term account, and I'm waiting now for a break to recycle back into that. I may still have some shares. I'd have to look. I have probably total of almost a dozen different accounts, both personal and family accounts. But there's some resistance there where it's at around 165, but that's a big level. Forget about the 176. That level's at 182. Very solid support shelf back here. If and when it gets through there, that opens a door for move up to about the 293 area. Might need to consolidate a little before it does that because we've had a sharp run up recently. But again, I'm seeing a lot of momentum coming into some of these ag stocks right now, and that's why I'm doing this video. Here's DuPont. There's a couple share classes, A and B. This is the preferred shares, class B. There's just an uptrend to watch. Not one of my favorite. And there's a preferred class A, and we already covered the sector. 25 minutes into this video, so what I'll do quickly is jump over to MOO. Here's the Ag ETF, Market Vectors, Agribusiness ETF, and you can see here's an uptrend line to watch. It needs to remain above this uptrend line to stay healthy. We recently took out this previous reaction high. There is some potential divergence. We're making an equal high right now in the RSI. We could burn through that divergence so should prices continue higher. There's a little resistance. We're actually at resistance now. And there's also potential negative divergence on the MACD. However, the MACD is pointing higher. What that means, the momentum is up. That divergence wouldn't be confirmed unless we roll over soon while we're still below this previous reaction high. And if we can take out these other reaction highs, that's bullish. So the target for MOO would be, at least that 53.12 area. You have a decent dividend because it's full of these ag stocks, almost a 2.75% dividend. And I already covered a lot of these. I covered most Monsanto, I believe. Some of these, as I mentioned, overlap the ag business sector that I just covered. And this is Tyson. This is a bearish chart to me. You have negative divergence on the RSI, MACD. Tyson Foods, I'm sure most of you are aware of Tyson. You probably buy their frozen chicken or frozen entrees or whatever. They big company. These are targets here. And I don't believe I've added this as an official trade. We saw the breakdown here, but it's not rolling over yet. That might be because there's upside momentum in the sector right now. So that's on watch for a short trade. Deere had a huge pop recently. That was probably earnings induced right up to this resistance level. If it happens to get into there and fill that gap, it'll have significant resistance here at 90.55, but I think that one was a little too much for now. It's probably due for a pullback. You could certainly short it here with a stop just above the inside of the gap because if it gets up in there, it's likely to backfill. Short it just for a pullback trade, probably around that 85 level would be my target, but not one of my favorites. So I'm not going to add that as an official short. ZTS, and you can see a nice rising wedge pattern. Looks like it's just starting to crack, but again, we're not seeing any impulsive follow through. But there's one, the MACD has confirmed the divergence. It's pointed lower, and that one I believe comes back in. I think you can short it here, especially if you see a little volume picking up, a little more downside follow through, get away from that trend line a little bit more. Let's try to tighten that up. And that one's probably likely to drop down to this area here around 48.75. That'd be about a 5% drop. There's a lot of support there, so I wouldn't target any of those other levels. I'd only look for a quick pullback trade if I do that one. ADM, Archer Daniels Midland, looks like an ascending price channel at resistance. You have this big gap back here that has already been backfilled. It's flirting with that level now, so that is resistance. The top of that gap, 45.08. Really can't do anything. If it breaks up and takes out the gap, that would be bullish, and as long as it remains above this uptrend line. So you could go long and use a stop below this uptrend line, or you might even try to short it on a break of that uptrend line because you did have a divergent high. It's not noted here, but now I'll mark that up for you. You can see the divergence as it came in to backfill that gap on that high. So that indicates a likely trend reversal there. And a pullback target, I think it's fair to say around that 41.40 area. POT I already covered. AGU I already covered, didn't I? Believe I did. TSCO, no, nothing there. Mosaic I covered. BG, this one looks like fairly well, not too many reactions. A downtrend line there. So a big symmetrical triangle, and if it breaks to the upside, You have a target here around 68.41 and then around $80. MHG, Marine Harvest, I imagine that's an aquaculture company, it's safe to assume. Maybe salmon, scallops, who knows, tilapia, any of that stuff. There's an uptrend line which it broke down, but that one's already played out pretty much. You can see the divergence. This is just an example how well the charts often work. You know, you had a divergent high, breakdown, back test, and then prices rolled over, but pretty much already hit the target. I probably should have just skipped over that one. SQM, looks like a chemical company. There's some support right there. This one broke down from that rising wedge pattern, back tested, but has refused to roll over yet. So it needs to break under that 24.20 level. If so, it's probably headed to 23.05. And if things get really ugly with the stock, probably all the way down here to around the $20 level. But that one looks more bearish than bullish to me because of the divergent high, the breakdown from that rising wedge. FMC, there's a nice, pretty well-defined trend line. In fact, very well-defined recently. You can see numerous reactions. So this one's ready to pop. I would be on alert for a long entry. It is a sort of a symmetrical triangle, at least a triangle pattern, so it could break to the downside, but your risk reward is pretty nice here. You wait for a breakout, and then in this case, I would set my stop just below this uptrend line. First target would be here at 50.80. Let's try to measure that out for you. If we popped soon, we'd be around 46.82, and that would be 4.5% gain. Nothing to write home about, but this one could easily head up to this next resistance level. You can see these reactions around 56.40 or so, and that would give you about a 16-15% return. So not bad, and that is FMC Corp. Couple more and then we're done. I already mentioned CF and TTC, Toro. There's one that I mentioned earlier, but I didn't get to the chart. Potential negative divergence, but you see as I circled, the MACD is healthily pointing up. It's the momentum is strong to the upside. That was that recent rip here. However, if it rolls over soon, and I think it will, I suspect Toro will probably roll over. This looks like a final flush out move, final clearing of short interest. So look for a reversal there, and then if you want to get aggressive, well, we don't really have this trend line could change because it's still in an uptrend. If we start to turn down, then we finalize the top of this wedge right here, and you can get a short very close to the top of the wedge. Usually want to wait for a break below a rising wedge to short, but sometimes you can short at the top of a wedge, and there's a lot more meat on the bone on that trade, especially if it goes on to break below. Targets would be 90. A little over 90, 90.10, then 85.34, and again you have to adjust those, set your stops a little bit above that, or your sell buy to cover orders. Yeah, this one's been in a long-term uptrend. You probably have some negative divergence there on the weekly chart, and certainly catch a falling knife trade in reverse. This one's very strong uptrend, but the dividend isn't that much, so there's no big deal shorting that, even if you had to stay short for a while. And P ratio is getting a little lofty, around 25 on that one. Okay, just two more to go here. ICL, can't recall. I already did cover that one, I believe. Little triangle pattern, some targets I already gave you. And then last one is Anderson's, ANDE. It's really in this trading range here, so we have to break above or below that. So this one's not actionable at this point in time. There's a trading range, but longer term, if it breaks above it, that would be bullish. And if it breaks to the downside, that would be bearish. Probably going to fill this gap right here, come down to 29.90. All right, that's a whole bunch of trade ideas, long and short. And again, some of these may become official trade ideas, those that aren't already. And if you have any questions, just drop me a line. This has been Randy Finney with Right Side of the Chart.